And one of the biggest things we find is time kind of squeezes down the decision opportunity, and emotions run high, and there's high stakes when you're selling your multi-million-dollar property or business or cryptocurrency asset, and you're looking at a lot of consequences if you don't solve this problem or have a team to help you solve it. And so here at Capital Gains Tax Solutions, we want to empower you with the Deferred Sales Trust or the other options that you might be curious about, whether it's a 1031 exchange or opportunity zone or a Delaware statutory trust. And the goal is just to give you a clear plan to exit well. And sometimes it means a combination of 1, 2, or 3 of those strategies. And so we're going to go through in this video just a few common objections and hopefully to answer and put you at ease so that you can make a clear decision with your Deferred Sales Trust. So let's discuss one of the top objections that we do here, and that has to do with control. And it's probably the #1 objection, which is, hey, I love the idea of the Deferred Sales Trust and deferring this capital gains tax, but how much control do I have as the note holder? Well, it's important to understand that the Deferred Sales Trust, if you have too much control, it creates a situation where you have received the actual funds, which can create the tax trigger. And it's the same reason why, if you've ever done a 1031 exchange, that you need to have a third-party qualified intermediary to relinquish control of the funds for a period of time so that you can keep the tax deferral. So the characteristics of the Deferred Sales Trust is that you are the lender to the trust. You do not own the trust. If you own the trust, it would be selling it to yourself and be taxable. So you do need to give up some control. Now you still have what's called indirect control, and the best example is a bank. And in fact, that's exactly what's happening. You're lending the funds just as a bank might lend you funds for a mortgage on your house. And there's certain restrictions they're going to put in place, such as rates of return and payment schedules, and their rights and protections should that payment not be paid in time. And also things like fire insurance and things of that nature. Or for a commercial property, they're going to want to look at the income and expense statements, and they're going to want to make sure that the property is operating properly so that in case their investment is at risk. Well, the same thing is true with the Deferred Sales Trust. In this situation, you are the lender, you are the bank, and you're lending the funds to this trust, and you have indirect control by approving the payment schedule, approving if and where and when the funds are moved into investments. And that ability creates that safety should you want something to change, that we can adjust it along the way. And in fact, we work with third-party financial advisors as well as some of the best commercial real estate operators and syndicators across the country to give you great options that you approve. And so realize that as a trustee here at Capital Gains Tax Solutions, we're here to guide you and to bring you great opportunities, but work with the professionals who are executing day-to-day on those investments, such as financial advisors and commercial real estate operators. Also, if you're open to cryptocurrency, we also have some experts in that area that we can make introductions to. But the biggest idea of the Deferred Sales Trust is the team. It's all of us working together to help you feel comfortable, feel great about the funds moving in and out of investments, and the payments being made to you. We also use third-party banks, and these funds are never commingled with other accounts. They're never in any of my personal accounts or business accounts. In fact, they're completely separate from every other trust account so that you have that transparency and that accountability and that protection. You also have 24/7 access to view the funds online. And again, the funds never move without your approval or your signature. So we want to introduce you to our strategic alliances and the banks so that you feel really comfortable about the control of the Deferred Sales Trust. The #2 objection we face a lot is, hey, this sounds too good to be true. Like, how do I know it's legal? I need my CPA to say yes before I move forward. And we can certainly appreciate that. You've had your CPA and your legal team, or even a commercial broker who's skeptical, or a qualified intermediary that you work with who's skeptical. And every single day we work with business professionals across the country to help them understand what the Deferred Sales Trust is, what it's not, and the legal track record. And so the first thing we want to encourage you to invite those people in. We don't want to push those folks away. We want to invite them into the conversation and have them bring up their legitimate concerns and then allow us to answer that with evidence. And here's some of the evidence just so you have it right now. There's been thousands of closes with the Deferred Sales Trust from over 26 years. There's billions under management. There's been over a dozen no-change IRS audits, including additional formal audits. In fact, there's as many as about 20 audits that have taken place collectively with different forms with the IRS, state and federal. And one of the biggest deals is for a property in California that was a deal in San Diego, over a $100 million property that was audited, and it was passed as a no-change audit, meaning no change, no findings, which is actually a remarkable thing to think about. You know, if you or I were to get audited on our tax return right now, the odds of the IRS not finding a receipt that was missing or something that's off are very low. But for all the deferred sales trust transactions, the deferred sales trust tax attorneys are batting 1,000, and it's been a perfect track record so far. And so sometimes folks will find us and they'll read something on the internet such as, well, doesn't the Franchise Tax Board, you know, say that it's illegal in California, or certain qualified intermediaries may dissuade you from using the deferred sales trust. And the biggest thing to encourage everyone to look at is just that it's batting 1,000 and it's never lost. And a lot of the blogs that are out there may be talking about a similar structure, but it's not us. For example, is called a monetized installment sale, and this has recently gone to IRS court, and they have lost that court case, and it's now on what's called the Dirty Dozen IRS watch list. And so the deferred sales trust is not the monetized installment sale. In fact, it's just the opposite, although they do use a similar tax code, or the tax code, which is IRC 453, but it's very different in the way that it's applied. And that's so important to understand. Like a 1031 exchange, just because you're working within a 1031 exchange, if you don't follow the rules and do it in certain ways, doesn't mean it's going to be legal. And so same thing with IRC 453, which is what the deferred sales trust and the monetized installment sale are based upon. If the team of professionals aren't executing in the way that the law allows, then it doesn't matter if you're using the same tax code. And so we want to encourage you to not to take one opinion and just let that dissuade you from the deferred sales trust. As well, there's been national law firms, okay? And there's been, we have third-party former IRS agents who work for the IRS who are tax attorneys who have vetted this, and we can put you in touch with those folks as well. But one of the best stories I have that I feel really comfortable with the deferred sales trust being legal is for a gentleman who worked with and built up a company called PIMCO with a gentleman named Bill Gross. And this gentleman's name is David Young. And David and Bill got together and with about 5 other guys, and they built this very large, successful money manager across the world. And they built it from about 80 billion to 1.2 trillion. And they're some of the best in the industry as far as managing wealth. And they all get this big payday and they retire. And David and about 4 of the guys, they decide to get back together, bring the band back together, start to manage money again. And they get approached with the deferred sales trust about 5 years ago. And that began the journey for them to vet the deferred sales trust, the legality, the systems, the processes, the investments, and how this could serve their clients and future clients. And what they found after 2 years of due diligence, extensive, exhaustive due diligence, and meeting with the tax team, signing the NDAs, going through the process, they found that the deferred sales trust was not only, they felt it was legal, although they're not tax attorneys or estate planning attorneys, but they felt that they had enough confidence to move forward and actually join the deferred sales trust inner circle and offer that for future clients, for the deferred sales trust clients, and or for their clients moving forward. And we believe these type of third-party validations from some of the best in the world at what they do can create confidence for you. And so the question we ask you is, if it's good enough for David Young and his legal team after 2 years of due diligence, and he works with some of the best and smartest and brightest in the financial advising industry, is it good enough for you and your legal team? And we encourage you to take that challenge and bring your legal team and bring those who are skeptical and cautious about it, who want to protect you, but bring them in and have an open mind, and let's discuss why the deferred sales trust is legal and why it works. So objection number 3 we often get is the deferred sales trust seems amazing, Brett, but I just don't understand the fees. It seems like it's so expensive. Where I want to tell you a couple secrets of how to make the deferred sales trust an investment and not an expense. And this goes back to some of the benefits here. And if you zoom in, you can see maybe some of them here, but I'll start with the first one, which is buying back in and out of real estate. And we talk about real estate as a way to grow wealth here at Capital Gains Tax Solutions. And one of the best ways is through value add, a multifamily or land development or mobile home parks or senior housing assisted living. We found that the top 3% of all of Americans who own wealth own commercial real estate. And so the ability to use the trust to buy back in and out of it at any time is one of the best ways to make the deferred sales trust an investment and not an expense. And let me tell you a story. In fact, in 2006, this story that I'm about to tell you is the reason I started Capital Gains Tax Solutions after the 2008 to 2011 kind of crash, where I had a lot of clients, friends, and family lose half or all of their wealth. And the story is this: the gentleman, we call it the Monday morning quarterback story. He purchased a property very low and he wrote it up to a high value to about 20 million in Minnesota. And he sold that property for about $20 million at the peak, and the peak being about 2006. And he did not do a 1031 exchange because the properties didn't make a lot of sense at the time. In fact, he did a deferred sales trust for the first time. And he took a chance, and because it was something new to him, although he vetted it very closely. He's worth a couple $100 million at the time. And what he found was the ability to park the funds into liquid investment grade securities, protected and hedged, and really to keep the powder dry was more important to him than just paying the tax. And this created an opportunity that within 5 years, the property that he sold was foreclosed on. And the story goes like this: the bank called him back and said, "Hey, look, we just foreclosed on the property sold to that other 1031 buyer years ago." He goes, "Yeah, I remember that." He goes, "Well, do you want to buy it back? Because we're here to sell it, and we're about to sell it here for about a 40% less than what you bought it, what you sold it for." And he said, "That sounds like a pretty good deal. Let's put the deal together." And so he was able to use the funds in the trust and to partner with him in a new LLC and buy that property back at 60 cents on the dollar. In other words, he sold high and he bought low, which is one of the best ways to make this deferred sales trust an investment and not an expense, is the ability to take advantage when the market is a buyer's market, and the ability to protect yourself and diversify when it's a seller's market. And we're going through these huge changes right now in the economy. And now I believe right now is an amazing time to do just that, to sell high and position yourself to buy low. And that might be back into dollar cost averaging to stocks. That might be buying some cryptocurrency at a low price. That might be starting a business venture. That might be buying real estate when it makes sense. But the key is optimal timing, okay? So that's one of the best ways to make the deferred sales trust an investment and not an expense. Let me tell you the number two way. The number two way that I've found has to do with income tax. So think of your wealth plan as in a Rubik's Cube. And this Rubik's Cube has different colors on it, and it's kind of a little bit disoriented, and you want to try to match up all of the colors on every side. And that could be for your personal reasons to sell, that could be financial reasons to sell, that could be asset protection, that could be capital gains tax, that could be estate tax. But one of those sides I want to encourage you to think about this Rubik's Cube is income tax. And if you're in a very high income tax state like a New York or California or other high tax states, one of your biggest challenges is all the income that you're receiving is you're having to pay a very high tax. Well, enter the deferred sales trust. What's beautiful about it is you can delay income from the trust, which can lower your overall tax bracket. In other words, you can sell high, you can have the trust earning interest, and like an IRA or a 401k, that interest and all of its earnings is remaining in a tax-deferred state. Okay, and that's an amazing way to let the time value of money and the money that you would have paid to the government grow for you. And we call this the income tax advantage. The other part of this is perhaps you might move out of state. In fact, I had a client in Palo Alto, and for 30 years he helped people buy and sell primary homes. And he was one of the top realtors in Keller Williams doing this. And he was selling his $8.3 million house. And one of the biggest challenges he faced was not only capital gains tax, but also income tax. So he said, "Brett, I'm planning on moving to Nevada. You're telling me I can move to Nevada, establish residency there, and then start taking payments from the trust. And those payments, if it's interest payments, I'm able to take in the state that which I reside and therefore have a lower income tax." And the answer is absolutely. And this is the income tax advantage that we want to walk you through to show you that if you move out of state and you establish residency, any of the interest payments will be taxed in that state in which you're in. Now, the capital gains tax that's in there is based upon the principal. That'll always follow. So, the state will be owed back when you take that. But here's the cool thing. You don't have to take that principal. In other words, you can live off the interest. There's no rule that says you have to take principal pay down. In fact, the way we structure the majority of our deals is just that. Interest-only payments, typically 5 to 6%, even though typically the note's earning about 8% net of fees. And that creates an opportunity for you to make this deferred sales trust an investment and not an expense. The number three way to make the deferred sales trust an investment and not an expense is to use the trust to move your equity outside your taxable estate. So whether that be a highly appreciated commercial real estate property, whether that be cryptocurrency, public or private stock, your overall net worth is separate from a stepped up basis. In other words, a lot of folks have been taught, and we've taught it too in the past before we knew about the Deferred Sales Trust, that you, in a 1031 exchange, you swap until you drop, and then your kids get a stepped up basis and you walk away tax free. Well, not so fast. It's just capital gains tax free if they were to sell it with that stepped up basis. It has nothing to do with estate tax. So I'll tell you about a deal that we closed for a client here recently out of Colorado. In fact, they lived in California, but they were selling a $5 million property, and they're worth about $25 million. And they're looking at a huge estate tax challenge, meaning 40% above and beyond their exclusion. Now, these exclusions are about 22 million married, 12 million single, but they're set to cut in half in 2025. But their overall situation was, Brett, we really want to solve this estate tax challenge, at least with this $5 million. So here's what we did. Upon the exit, we used what's called the Deferred Sales Trust Plus, and also known as the DST 2.0, to move the funds outside of their taxable estate, which eliminated that estate tax challenge. Not only that, but they were able to delay the trust from paying them for a couple of years because they're California residents. So they were able to get the capital gains tax deferral, the income tax deferral, and the estate tax elimination. So when you start to stack these values to the Deferred Sales Trust, I hope you can see that the Deferred Sales Trust is an investment and not an expense. The next objection we tend to see with the Deferred Sales Trust has to do with the options for investments. There's different options for investments, and sometimes folks don't understand exactly what that means, that you can be active in the real estate itself. You can be passive. You can be retired, or you can start a new business venture. You can go into cryptocurrency, you can go to stocks, bonds, mutual funds, you can go into real estate. But what can't you do? Well, the biggest thing you can't do is put it into primary personal use. What does that mean? Well, if you want to put it into a primary home, that's a taxable situation. But if you want to put it into investment property, it's tax deferred. So the ability to invest how and where you want, when you want, is one of the best advantages and one of the most misunderstood concepts of the Deferred Sales Trust. In other words, if you're an entrepreneur, business owner, real estate owner, and you're used to building your wealth the way that you've always built it, you can still do that. You can do that actively with the Deferred Sales Trust. In fact, you get a new depreciation schedule should you purchase property with the Deferred Sales Trust versus the 1031 exchange, which has the old depreciation schedule. And so one of the best ways to overcome this objection is just know your options, right? Know your options. And then you want to build a team to help you execute those options. And so that's another great way to overcome any false objections with the Deferred Sales Trust. Hey, I appreciate you watching this video. I have a lot more here on YouTube that you can check out. You can also go to capitalgainstaxsolutions.com. You can look for our new book that's being released with Kevin Harrington from Shark Tank. And I just really encourage you to have a plan and to get with professionals to help you execute that plan and to be open-minded for strategies that you might not have heard of, but can solve so many of your challenges to help you create and preserve more wealth. And if you're a business professional watching this, whether that be an M&A advisor, cryptocurrency expert, luxury realtor, commercial broker, we want to work with you, financial advisor. We want to team up with you. We want to partner with you to be able to provide education and content and opportunities for you to execute on the Deferred Sales Trust so you too can have a way to help more clients. And so thank you so much for watching this video. Again, go to capitalgainstaxsolutions.com and look forward to connecting with you soon.